go ahead and get started. We'll set here. Hold on 1 second. This is Jeffrey Scott, and welcome to today's weekend review. This is September 30th, 2012. Apologize for the lateness. It's about 8 p.m. And I'm going to anticipate that this will go on for the next 75 to 90 minutes. It's going to be a little different than my typical program, as I'm going to bring in a little bit more information on a couple of other programs and respond to a couple of the questions that were brought up from folks that emailed me. My email address is there. I certainly appreciate all the kudos and the thanks that I get. I'm trying to grow the number of people that actually watch, so if you can post them to boards, that would be great, rather than sending them individually, and that way I can spread the news. Those will continue to be placed on YouTube. I'll continue to do these weekly unless I have major commitments. And once a month I will do a live program. There will be a live program Tuesday night, and those who are HGS investor board followers, I'll post on that board and plus a couple of other boards, and maybe even put a picture up on the YouTube site so people can see that as well. Disclaimer, this is for educational purposes only. As everybody will tell you, everything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians have lost all their money with their investments. I wish I was kidding, but I'm not. And perhaps one thing that makes me unique is I'm not selling you anything. I do it because actually it helps me with my education, helps me keep track of the market. But all the programs that I talk about and I use, I actually paid for and continue to pay for. And so I guess that perhaps gives me a little different bias than most people that do these webinars. Just to get an understanding of who I am and what types of things I do. If I was stranded on a desert isle, besides my lovely wife, what I'd need with me are a real-time charting and trading platform, either TradeStation or Thinkorswim. I'm sort of stuck. I would be happy to have just Thinkorswim. It's a free platform. TradeStation, I do plenty of trades. I don't pay for it either, but I've had a pretty substantial investment in third-party programming on TradeStation, so I think I'm going to be with it for a long time. I need something to analyze the market, and although I can do much of that within POS or TradeStation, I find the things that I can do with high-growth stock investor, which I'll show you tonight, really differentiate. EdgeRater, which I probably will not go into tonight, is a program that allows me to backtest pretty much anything I want, but certainly allows me to backtest some of the strategies I do with high-growth stock investor. One of the things about EdgeRater I like to play with is varying the stops and looking at the impact of various types of strategies. I will look at seasonal analysis early on today. If you think this market may be due for a pullback or correction here, in addition to where we've been already, and you're looking for some stocks to short, I'll show you some things that I do, some tricks that I've learned over the years that help to give me some ideas of what to do. And then lastly, just to throw out some comments about Ian and Ron, high-growth stock investing is a sort of a triad between the data company, which pretty much is no longer part of the triad, the industry monitors, which was a company that's been around for a while that did some great works in giving us a group structure and Metastock and other programs that mimic some of the popular groups. And then Ron Brown and Ian Woodward, to start with, from their intellect and their trading ability. Ron Brown and Ian Woodward are great teachers. They're full of ideas. From a paid service, they have a newsletter once a month and daily market updates. Ron puts a free weekend review into this on the web on a weekly basis, and Ian has a great blog. As I go through and try to figure out how do I think and how do I make decisions, much of what I do is based on what I've learned. And I learned from people that I consider to be smart folks. Ian and Ron taught me a lot. Willie O'Neill, How to Make Money in Stocks, proprietor of Investors Business Daily, Mark Smith, Investors.com. Going around, Chris Katcher took O'Neill's discipline and took it to a new degree of pocket pivot. Alexander Elder, a psychologist, Russian psychologist, who has really looked at psychology of trading as well as his own indicators through wonderful books I highly recommend. Van Tharp, who's a guru when it comes to position sizing and stops. Also some psychobabble, but an excellent book of learning how to trade. Pascal Willing is an interesting approach to try to differentiate the trades from the big money versus the trades from the individuals. And one thing that I'm a big believer in, you'll see in things that I do, Never Lost Trading, that is very much looks at the big money and where it goes. I like candlesticks, the big loads, and then that taught me. And then Ron Grunke, I mean, if I was retired and didn't know anything else and was really looking for an easy way to make money, and I knew I couldn't make it making 0.25% on my savings, writing covered calls. Grunke is an expert on that. I've read very well-written books, and the software will help with that. I may say the word, I'm going to buy that, I'm interested in buying that. I'll show you exactly with Thinkorswim how I set those buys up. I'm going to look at TradeStation and look at it as well. Just because it looks like a buy tonight doesn't mean I'm going to buy it tomorrow. I have no idea what the market's going to do. The futures are a little soft. They're really flat right now. Draghi can come up and save Europe, and the market could be up 500 points tomorrow. Bernanke's going to speak tomorrow. And they hiccup, the market's down 300 points. You have to do what the market's doing and telling you. And I'm a big believer in top-down investing, which is what the market says, what the sector says, and then let me find the best stock in the sector that I'm going to be in, but I want it all to be pointing in the same direction. So I come up with a list of potential buy stocks. I have some pre-planned setups, some that are automated, and I'll show you that in TradeStation, and some that I put in contingency orders. And then I see what happens as the market opens up. As usual, I will look at the market first. And before I jump into the top-down investing, I'll go into some of the other programs, specifically TradeStation and Thinkorswim, and show you some of the things that I do in the Magenta Trader. And then I'll go back on track and finish probably by going back to Thinkorswim and looking at how I actually make my trades using that platform. Sorry about that balloon that popped up. I guess I could probably turn that off. Yeah, I guess not. A couple more comments. Ian and Ron, great people. Live meeting, best live meeting I've been to, even considering how great the George Lee Anaheim meeting I went to earlier this year was. October 27th through 29th, it's about $1,250. They feed you, they educate you, you get great networking opportunities as you meet some of the other folks that are part of the family. And frankly, part of the reason why I consider these webinars is to help extend that family, because we actually learn quite a bit from each other. And that's part of the nice things about the HGSI family. Here is the website, highgrowthstock.com. The free weekly reports from Ron Brown can be found by clicking on reports at the website. Here's the URL for that. And if you're unfamiliar with this product, you have a free trial. It does not even require a credit card. Lastly, the most important thing to me is to know what the market is doing, because I don't care how good a stock picker you are or I am. If the market drops 200 points, your stock's not going up. It might go down less than others, but it's not going to be a winner. So you have to go in the direction of the market. If the market's 50% of what my stocks do, the index, or should be the industry or sector, probably 20 or 30%, which means that the individual stocks are responsible for 20 or 30% of its behavior. This pattern here repeats itself in multiple time frames. I like to use the term as fractal. And if you look at daily, weekly, hourly charts, you're going to see a similar pattern. Where are we today? I've been saying we're in this upper right shoulder for the last several months. We still are. I mean, I don't know if this is a pause to refresh and we're going to go to 1,500, or are we going to drop down and have a serious correction here? I don't think anybody knows. It's too news-driven, and I'm going to show you some reasons to be confused or mixed in your response as well. It's a lot of fun when the market's breaking out of a long consolidation and you know it's going up. And it's fun to short when you know it's starting to drop like a rock. So what do you do when you're in between? So I like to think that we are sort of living in that, I guess, almost a Darvit's box right up here. Darvit's box, as indicated by this down here, is you don't know which way it's going to go. And as long as it stays in this formation, you buy it, support, and sell it resistance. You buy it, support, sell it, resistance. Being aware that you're going to break above or below it at some point, you want to be on the right side of that trade. In an uptrend, easy to buy, easy to sell. In a downtrend, It's hard to make money short in an uptrend. It's hard to make money long in a downtrend. So you really need to know what your industry is doing, what the market is doing, and what your stock is doing. The website's great for other things such as webinars from folks such as Bill Morales, myself, and others. Some good teachers are on there. And it's much more than what you see on the sheet. The sheet's way out of date. Like I said, I will be doing a live webinar on Tuesday night. We'll look at some of the picks that we did tonight, as well as look at what October is starting to bring us. I hope to put the URL for this week after this week's webinar before I finish, and I'll keep checking to see if it's out. It's being posted on HGS.com, and therefore I don't have the URL. I only have my speaker URL. Parting notes: be your own guru, learn from many people, then make your own decisions. Investing in business, make sure you have the right employees, tools, and software. Continue your education, and trade the market we have, not the one we think we should have. So, first thing is let's take a couple of looks at where the market is. So first thing I always do is I go into my warehouse view. I go down to user groups, Woodward and Brown groups, Major Markets Plus, top-down analysis. For those that haven't been here before, this is called a view. A view is a combination of a filter and a combo rank. The filter defines what's in the list, and the combo rank ranks from top to bottom. I look at specifically 3 combo rankings when I do these programs. Top down is a pure technical, but looking at 1, 5, and 13 days of activity of price and volume. Fourth 13-day is a price times volume, or change of price times volume with an exponential moving average. I look at the elder fourth 2-day up and down, which is a very short-term price and volume combo, and I look at the scorecard, which is how I like to look at stocks, which is a balanced fundamentals and technicals. So from a top-down analysis, looking at not just the last 2 days, but looking at the last 2 weeks, one can see where the strength in this market has been. Now what's interesting, the last couple of times the NYSE was a leader, and I made a comment that small stocks were outperforming. Well, clearly that changed this week. For those that haven't been here, don't get lost in the minutia. You'll have an opportunity in other webinars to learn what I'm doing. These are momentum bars. I like green. I don't like red. If the long-term one is green in this case and the short-term one is red, that's consistent with the pullback. These two are called the bando. There's more than one in the middle. It's sort of an in-betweener. These two on the bottom are elder force. The one in the middle is accumulation and distribution. Again, green is good. Red is not so good. This is the high jump bar. When it gets to the highest level, the stock has a tendency to snap back, like pull a balloon to a rubber band too far apart, and you can see top of the high jump bar, shooting star, the pullback in the indices. Down here are a number of momentum indicators, Kahuna, Eureka, Stevenson, and I'll point them out when we see them. I look at candlesticks. The red here is a pocket pivot down. The blue is a pocket pivot up from Morales and Catcher. And I'm a moving average fanatic, 8-day exponential, with a 17, 50, and a 200-day. So looking at the NYSE, what do I see? I see a market that is still going up. It's above the 200-day moving average. It's clearly in a pullback here for about 11 days. It's a high jump max, and it had a shooting star. The 50 is above the 200. That's, to me, a definition of an uptrend. The 8-day exponential, which is very short acting, has now crossed below the 17-day, and we had a bearish candlestick on Friday below the 17-day moving average. So still in an uptrend, pulling back. It could bounce at any time. It could drive down to the 50-day moving average and bounce. If it doesn't hold at the 50, the next target would be the 200-day. It's going back over the last couple of months. It's not broken much below the 17-day, and I'd be looking for a rebound here, certainly hoping for. So small stocks weak, but not out yet. The small S&P 600 and other small cap indices, all small caps with NYSE is a mixture. You can see a pretty sharp decline from the top of the high jump bar to where we are today. Again, in between the 17 and the 50-day moving average. One might expect, as we've seen back here on several occasions, to pull back to that 50 and a bounce. That would be my short-term target if we continue to fall. The strength in the market have been in the things that are inverse to the dollar. Gold and silver up near the top of those commodities. And when one looks at a chart here, you'll see mostly green, although it's definitely a pullback. Last week occurred the average of green. We're close to the tie jump bar top. Much healthier looking chart above the 17-day, above the 8-day exponential. And this is despite the fact on Friday that the dollar had a good day. Gold has stayed up. Silver looks a lot like gold, up way above 50, about to do a golden cross above the 200. For many people, that itself might be a trigger to go long. I like to look at the S&P. Well, let's look at oil. Let's look at the dollar, and then look at oil, and then I'll look at the S&P 1500, and then I'll show you some other tricks that I do. This market run-up that we've had over the last couple of months, where it keeps going higher despite bad news, is really driven by a falling dollar. The dollar hit its bottom about 2 weeks ago, and it's had a small move up since then. If this dollar continues to rally, my target will be the 200-day moving average, and the market will drag, as will commodities. If the dollar comes back, then we'll see potentially another leg up in the market. Obviously, the dollar is going to be very much dictated by what's happening with the euro. Gold, oil, black gold, looks a lot like the dollar, doesn't it? It's pulled back. Because I think both the dollar and oil are somewhat linked in the health of the economy. And if the economy in the U.S. and the world seems to be strengthening, or something is being done to strengthen it, then the dollar goes up, and so does oil. If we are mired in a horrible economy, then one expects the dollar to fall. Frankly, this is a very bearish chart. You've got the 200 at the top, the 50 is way below the 200. Everything, the 17 and the 18 are pointing down, the 200 is pointing down. I'm not real optimistic about the oil. Now, that's worrisome because oil would be a leading indicator, perhaps, of the market getting better, or in this case, getting worse, at least the economy. Although we did have a kahuna, and the kahuna is just a big movement on Thursday, and you can see from my prior webinars for a better definition of that. It's a great momentum indicator. So the oil is definitely weak. And if I go down to perhaps one of my favorite indices to pay attention to is the S&P 1500, because it's a great indicator of the marketplace. And that's because the 1500 consists of the 500, which are the big stocks, the 600, which are the little stocks, and the 400 that are the medium stocks. And if I pull it out a little bit, you can see that it broke above the 200-day moving average prior to the end of 2011. It came back down to test in June. It has been in an uptrend ever since. So it's a rather slow climb, and we are down at the bottom of the channel. So this could be evidence that we might see a bounce from here. Now, the reason why I got more than one line here is I got the impression that the velocity, or the annual velocity, had increased a little bit with the market picking up. So you could pull back down to this line, which is sort of in the same place as the 50 as a short-term target. If the downside continues, and look for a bounce there. And if we have a really tough time, then we might get down to the 200-day. And lastly, look at the S&P 500, and I'm going to jump into TradeStation in 1 second. What we see here is a similar pattern to the 1500, and continued slow move up, and really the first 1410-ish will be a target on the downside, and obviously those that are bulls would like to see it get above 1470 and go up and take out 1500. So that's my take on the market, which I don't think I told you what my take is, except to say caution. I think we've got some near-term risk, at least down to the 50. If it gets below the 50, we'll see a bigger correction. But this is so news-driven, I can't say that I'm strong enough convinced we're going down that I'm willing to short everything. Now, what other help can I get? Take a look at TradeStation here. It's a simulated account, so don't bother worrying about what the numbers say. So in TradeStation, take a look into what the futures are doing, and I'm going to explain this chart is one of the things that I do. So on the overnight futures, early end, Nasdaq's down 575, S&P 500 is down 2.5, oil's down, euro's down a little bit, dollar's up, and oil's down a tad. So firming of the dollar and weakening of the market, but really not much yet. So one thing I like to look at, and I learned this from John Person, is the Commitment of Traders report. So the Commitment of Traders report, as I understand it, measures open interest, it measures activity, options buying, futures buying between speculators that are professional, speculators who are like us, and then commercials who, for example, if you owned a hog farm and you are concerned that the price of hogs, well, you need corn to feed, and you're concerned that the price of corn is going to go up, you might buy corn futures so that even if you have to pay more because the price goes up, you would make your futures would pay off to make up some of the difference. If you thought that the price of hogs was going to go in the tank, but your group of hogs, whatever you call a hog farm, your hoggies were not ready for sale, then you might sell futures or buy a future so that you can sell it at a specific price. So the red line represents the guys that are doing it in the commercial business. We're going to take them out. The yellow, the goldenrod, represents us, the small guys, the blue, the big hedge funds, the ones that are supposed to be smart money. When those SP 500, which are the weekly SP futures, back in 08 when the market died, we were buying, the smart money was selling. Before it got to the bottom, the smart money started buying, and of course, in the rally up, at least in the beginning, we were all watching the speculators, the hedge funds make money, while the little guys, us, were short. So the message there is watch what the blues doing because the blues know more than the yellows. So the blues have been negative for quite some time. As I pointed out in my last webinar, I think that's changed. So let me do that. And you can see it's clear now that the professional speculators, the hedge fund guys, are now nibbling at the longs. Now, before you get too excited, if I go back a long ways to where the market, let me go out of this. When the market turned around here, the professionals have been long now for quite some time. So it remains to be seen if they're early, if they're right, if they're wrong. But it's a lot nicer to see the professionals going long than just going short. You know, the Commitment of Traders numbers are actually published for free by John Person on his website, nationalfutures.com. But the plug-in for TradeStation or any of the programs, there's a charge for it, so don't bother asking. I can't share it if I wanted to. It's protected to my version of TradeStation. So one of the questions that I got is, Jeff, how do you determine entries and exits? So I think that's a great question, and I'm going to show you what I do in TradeStation. And before I do that, I'm going to introduce you to a couple of different things. First one is called Tradeformers. And Tradeformers, is the name of the website, is they make robots, and I use their robots. And these robots can do many, many, many different things. Some will trade the opening range. Some will trade different things. I've got a trend-based robot. I've got a robot that plays the opening range. I've got a robot that is similar to the RMO ATM strategy and Metastock. And based upon a stock, I would pick which robots to engage. And then I actually rent from them a thing called the Megatron, which is a lot of robots combined with a lot of different strategies that basically automatically will trade some of my stocks. Now, if you don't know what the opening range is, the company is called Market Gauge and .com. And Keith Snyder, who's the proprietor, has been in the market for a long time, and they've got a great site, and you probably got an email from them today about possibly about a opening range class. And I use a lot of their stuff as well. In fact, the Tradeformers are a very close cousin to Market Gauge. In fact, they're all the same family, frankly. So how do I use these robots? So here's Arctic Cat, and I'm trying to think which one would have triggered this week. Well, so I'm going to copy this window, and I actually did a webinar earlier, and I forgot to tape it, so I'm doing the second one now for you guys. I picked a good one last time. And basically, what I do is I run a strategy during the day, and based upon meeting certain characteristics that we programmed in, buys will be triggered. This is the one I think I read earlier today, isn't it? No. Based upon the open range, high and low, we have different stops placed in. And so these robots, which are painting these lines, are actually trading my portfolio for me. Now, I don't do this with a big chunk, and I'm still learning about it, but they actually have a number of robots that look at pivot points, opening range. I've got, as I said, a trend finding thing built in, a number of different projects, and a number of different stop programs in. And basically, they're working on building me a front end so I can check off, this is the buy signal I want based upon my list of available signals, and here's my sell. And so I've been experimenting with this. I've used it. And great guys at DataView, which is in the company, and a trade formers to help with that. So something you might want to consider. But I basically, during the day, will load in my watch lists. I will put the stocks that I want to trade into a window like this, and then I will get a signal if I trigger a sell. I can automate the purchase, or I can require me to sign off on it. I use certain things like this is a scanner, and I looked at earlier, I talked about Watson, or this earlier. We'll look at Watson. Watson was a buy that came in on Friday at the end of the day. It's one of my favorite stocks. It's a generic company. And this is looking at person's pivots. And I've got some trading strategies based upon pivot changes as well, using the scanners real time during the day. This is from Don Person, to identify stocks like this that are in a weekly buy mode by pivot here that pull back into a pivot point on a daily fashion. And what I would basically do is, if I was interested in that stock, I would probably come into my actions bar. I'll stick it down here. Stick it right here, WPI. I will stick it into a trading window. And by the way, this is a simulated mode, so it's not going to start. It's not going to trade, so I'm having fun, not worrying about what I'm doing. Copy the window, open up a new one, paste it in. Okay. And in fact, this is one that I did trigger on Thursday. And you could see it broke above the opening range and traded what our parameters were. And I had a long entry of 750 shares automated by the program at 2:30 on Thursday. It triggered a stop when it got above so many ATRs at 83.57 on Friday. And over the next couple of days, I'll probably end up seeing that stop trail its way up, and then I'll get stopped out. And that's an automatic trading program. Now, again, this is in simulated mode. I have to go in and basically turn on the strategy by clicking this button. But I'm not going to do that because I'm doing it for demonstration purposes. I'm not trading my portfolio. The other thing that I like to do during the market is to look at divergences. And I've only opened up the daily divergences. I didn't open up my weekly divergences. But I'll look at I'll look for bullish and bearish divergences on a daily and a weekly basis. And so this is looking at daily divergences. Here on the radar screen, PCG as a utility. Just take a look at it, and I'll show you what a divergence is. As you can see, we'll look at it a couple of different ways. It made a lower low here, and it did not make a lower low on the MACD on this histogram here. Probably isn't seen as well as it is on this chart here. While looking at the same thing, let me see if I can find it. Because this one has a regular MACD histogram, and I think it's a better study on. It's P2G, and you can look at lower low, yet the MACD didn't even turn red. And you're pointing up, although you're bouncing on the bottom on the MACD line with a crossover there. So divergence means got a lower stock price, got a higher MACD, which tells me that buying pressure may be coming into the stock and it may be ready to reverse. So I'm closely watching, and I might take stocks that have a divergence and put them into my trading program. Other things I'll look at are I'll look at bearish divergences. FTR, Frontier Communications, it keeps going higher, yet the MACD did not make a higher high. Higher high, not a higher high, in either the histogram or in the MACD lines themselves. And again, this is evidence of a higher stock with a negative divergence and suggests to me that this stock has a bearish divergence has a high risk of turning over. One of my trading programs will look at the crossover of the 8 and 21-day exponential moving average, and will trigger a buy or sell in the direction of the divergence if and when I trigger the crossover on the EMAs. I get off, and I like doing these automated trading. I limit how much money I put at risk because it is automated and there is a robot, and it's only as good as the programming. But part of my investment I make is I work with various programmers. The reason I'm going into this is I was asked questions by folks, how do I watch stocks and make a trade? I look at other things. I would be watching my stocks during the day, and I'm looking for things to happen. I'm looking at candlesticks. As I mentioned, we've automated the RMO ATM that's doing Metastock, or it's like it. It's not the same thing. And I might be able to look at, you know what, hold on one second, fill that in. And so I have a number of different programs that I'll be looking at during the day. Now, mind you, I'm a full-time employee of a public corporation, so I do work for a living, which is why the automated trading is important to me. I spend a lot of time on airplanes, which will limit, but I do have the ability of looking for the indicators we look at, and then I will set up various windows that will signal me to trade automatically by meeting my criteria. I'll look at Thinkorswim later, but TradeStation offers a lot of value, and the problem I have with TradeStation, why I can get rid of it, is pretty much all these things you see here are things that were programmed, I paid to have programmed, or I bought things. Some really neat things that you can do. Close that down here. So, commitment of traders report is bullish. Let's just look at the market with an Elder's interpretation. I'm a big fan of Alexander Elder, and I have one worksheet with all Elder stuff. So let's just take a look at the S&P 500. Not. Here it is. So in Elder's terminology, you can buy when it's blue or green, and you can sell when it's red or blue. You can't buy when it's red, and you can't sell when it's green. So the S&P 500 on a daily has pulled back, sort of right in the middle of his little bands here. And it is red, so it's not something I'd be looking to be buying long the market. As I look at the weekly and the monthly, they're less negative. So hopefully it's just a pullback, and we get a positive day. Maybe tomorrow, hope over reality, I might go to blue or green and reconsider buying in the market. All right. Hope you're enjoying this. I'm going to go fast because I got about an hour left. So I've made my determination. The market is plus minus. Now I got to figure out what is it that I want to do with my investment portfolio as I start planning towards the day tomorrow. So since I'm a little concerned about the market, sometimes I'll go in and I'll buy some puts. And I want to find things to maybe short. So last time I think I did a horrible job on Magenta Trader. So I'm going to change my approach today. Rather than look at individual stocks and try and show you how great Magenta is, how about if I use Magenta and screen for some stocks that are working right now. So what I want to look for are stocks that I'm going to pull up my screen called stinky stocks to sell short. Screener, load, and now let's switch. So I'm looking for stocks that are above $15, that have options, that are correlating well with the program this year, have been traded for at least 7 years, and they might tell me that it's time to consider going down. And so let's look at a couple. Now, one thing that made me nervous is there's a lot of housing stocks here. So what I'm looking at here is the Magenta price channel. And let me do a couple changes here. And 6 months. All right. All right. See, that's what I wanted to do. Save style. All right. So here is a candlestick chart. Now, one of the things that the screener looked for is a stock that this is clearly cycling up and down pretty much within the Magenta channel. It's looking for one more correlated. Well, it seems to be pretty well correlated with the predictions by seasonality, at least over the last several cycles. And if I take a look, let's just take a look at it for a short period of time. And you can see the tight correlation here as the stock has been going in through the cycles. So what does M&I Home show me from a seasonality? It shows me a high likelihood that this stock is going down. Now, housing has been on a roll, and housing has really outperformed the last many, many months. And if I look at the regular chart in HGSI, let's just look at MHO. I'm sure MHO will look like all the others. These have had great runs, and they've all pulled back. And so one of the questions is it a viable pullback, or is it a sign of something bad to come? And so as you can see, it's on its way down to the 50-day moving average. And I've done there, what's what I put here? If I put Pulte, that looks the same. If I put Toll Brothers, looks the same. So they're all very weak. So are these just a small correction, is it a bounce, or is it something to be more concerned about? And what I see here, MHO is going into a seasonably weak time in the market. It's a good Pulte. What do you see about Pulte? I see a seasonably weak time. Now, if you're looking for stocks to short, set this up. Oh, how do I get this to load my so get Navistar. Now, what you really want to do is find a stock that's cycling up and down. You want to find it before it's too late, and perhaps we missed this one, but what a great time to have shorted, and maybe you still can short Navistar. It's in a seasonably very weak period of time. I haven't looked at all these. Let's take a look at a couple of travels here. All right, let me change this setting here. Get to a little bit bigger window. So a bigger window, nothing there to short. Ariad, I wouldn't short this stock for the sole reason that it's one of these oncology companies that has a hot new product that is under consideration by approval of the SBA. However, it is at the high end of its cycle, and it's in a seasonably weak time. So what I've done here is, rather than with individual stocks, I've been able to find stinky stocks to sell short or consider selling short based upon seasonality. All right, so see correlation. Correlation is how much do they match up with the expected seasonality. Look at BCI. I don't think there's anything to short here. So basically, the ones that really came up and hit me, go back to the negative area, are these home builders, CSKX, I guess that's a shoe company. Make it a little bit longer, so 20. Not a little bit to short, a lot of green there. But I think the poster children of things that might be appropriate for shorts look to me like the housing industry, which is interesting because they've had such a nice run. Now, we could go back to the screener and change it from negative to positive, and maybe we can find some stocks to go long from a seasonality perspective. I don't know if it's positive area. All right, let me see if I can clean this thing up. I had trouble with this one because the move up is so huge. Let me see if I can try a couple of things and I can't get it and go on to the next one. 52 weeks, 6 months. Yeah, I'm sort of, well, Lear Corporation is one that's up. I must have a setting that's wrong because I saw this on a couple of them. But here is 20 OBTI. The time you want to go long this stock is later out here, so I'm not going to look further at it, but it might be something to write down. Like one stock that has a fairly predictable pattern, which is really doing well of late, is Google. And Google has a propensity during this time of year to go up. So those folks that are magenta traders and those folks that are fans of seasonality are probably been long Google now for a couple of weeks because it has done this every year. In fact, if you look at the data, if you look at September 19th to October 30th, 8 years, 7 years up, 1 year down, averaging 21.8% on the up year, a loss of 1.38 on the down year. November 26th to January 7th, 6 and 2, 10.16 on the up years, flat on the down years. And you can contrast that with what happens after that. The beginning of the year is weak. And back to back, you have 2 periods of time where you can pick up 13 or 14% of downside. Interesting, let's just take a quick look at Apple. Where's Apple fall? So Apple, maybe not a surprise that it's having some weakness here. But when you look at a little bit bigger window, Apple's about to go into a seasonal strong period of time as well. So seasonality, perhaps better used not for looking at a particular stock to prove the value, but rather looking at a searching program that has the ability to help you identify potential stocks based upon historical basis on the screener. Now, I will still come back to it later and show you how I use it on individual stocks, but I'm pretty convinced that for the purposes of making a decision about an individual stock or not, it's best to look at it by itself, but to look for, in a bigger picture, things to short or go long based upon the individual item. You're probably better off screening to find. Now, here's one that showed up on the screener, VRX. It's fourth there. And let me play around with this for a couple of seconds and clean it up. So if you look at 20-day windows, you're about to go into a period of time with multiple windows. a weakness for a stock. And if you look at the correlation, it's done exactly what you'd expect. And I'm long this stock. I'm going to short get out of it tomorrow because that may be as close of a pattern that I've seen of a stock that's ready to short. Unlike some of the other stocks that have already dropped quite a bit, here's one on the screener that is I don't want to be long because it's going into what is really a weak time. In fact, September 21st, October 18th, 7 out of 10 years down, 13% fall, 2.5% risk to the upside. This is a stock that probably is a good one to look at shorting and one that I'm going to have to look at mine in my portfolio when I get done. See, this is why I do these programs. It makes me a better trader. All right, I've shut that down for now. Let's go back into HGSI. Let's take a look from a top-down perspective now at industry and see if we can't find any stocks. And then I'll go into a Thinkorswim and address some of the other questions I got from people that watch my program. So in that warehouse, I'm going to drop down to industries. Whoops. There you go. And you can see there's 142 industries in this list. Now, if you look at things that have been performing well over the last couple of weeks, the one that comes to the top, and I'm going to look at a couple of its stocks, because I think one of the ones that I'm interested in for tomorrow is in this group. And let's just take a look. So this is up 4.5%, 4.8% of the last 5 days, 1.3% of the group yesterday. This combo rank includes one-day price and 5-day price, heavily weighted on the 1 day, accumulation, distribution, direction, and percent, and then force index. So it's looking at the force index over 13 days, so it's a little bit longer look. But everything there is technical. There's no fundamentals in this combination. If I right-click on it, change the index group, it ranks the stocks in the group by which one is best right now based upon technical patterns over the last 13 days or so. And the one that I'm going to be interested in tomorrow is Cerner. Let's take a look at Cerner. And for those that don't know healthcare, this is an old company, a good company, but Obama in his budget a couple years back, I think it was Obama, maybe it was in the Bush, they put in a requirement for all physicians to go to an electronic medical record. And believe me, as a physician, it makes sense. You should try to read my writing. But it also allows us to share knowledge across physician groups and probably reduce errors. Hospitals have had to make huge investments. Cerner is a major player in this business. Now, I think with the ebb and flow of the Obama candidacy, this might be a sector that pulled back if it looked like Obama had risk. And as you can clearly see, it's taking off again. Let me make things a little bit bigger here. So as I look at this, I see a relative, well, not as low risk as it would have been on Friday, but I see a stock that's pulled back to a 200-day moving average, and on Friday lifted off with a pocket pivot, a big kahuna, force kahuna, tons of volume. Still red on the long Bongo Weekly, but on my short Bongo Weekly, which is cheating, it's already turned green. It's at the bottom of its high jump, so it's got a big room to grow. Its group is a leader. I'm putting this on my list for tomorrow, and I'm going to show you how I'm trading it using my Thinkorswim. One thing, I've had people, a lot of people comment, they like what I do. Some people comment they don't like how I do things. That's cool. I think that we're all going to do things differently, and we're all going to have our own personal style. And this is my style. So I love pullbacks because I still know where to put support. I might put support right on top of this confluence. I'll put my stop here and rapidly trail it up. This is a pretty big bar. I might go halfway up this bar. I might be at the open yesterday. But I know where to put my stop, which is different than a high flyer where I'm a little bit not as sure. I like this stock, and I will come back to it later. Allscripts is one that also moves, and I don't know if it's moving because the group is moving. I'm worried here because it's got overhead supply of the 200-day moving average. And if you don't know this group, there are a lot of stocks in here that are different. Quality QSII, there's a lot of pharmacy systems, also some of the EMR work. Same pattern as we just saw, that it's way below its 200-day moving average, which means it's in a downtrend. I'm not a long-term downtrend. I'd rather buy things above the 200-day moving average. A big darling of the industry, the stock market has been Athena. If you've been fortunate enough to have this, I always wonder how stocks that essentially make no money or make a lot less money in growth rates than their price-to-earnings ratio. But this stock has a PE of 180, and you can see its earnings growth is much less impressive. But it's been a major mover over the years. So clearly this is an exciting group. And again, if I look at Cerner compared to some of the others, it's in a long-term uptrend. It's defined by the prices above the 17 is above the 50, this is above the 200. So long-term it's an uptrend. And the 8-day, it broke above the 8-day exponential, which I like to see. And we'll come back to Cerner later, but that's one that will be on my list to look at closely on Monday. I didn't too many of these to like today, but I'm going to educational services. And I remember telling one of my friends who's a money manager, Scott, I said, Scott, I'm buying educational stocks. This was about 3 weeks ago. And I felt kind of silly buying these things because these are totally junk off the bottom. But if you bought them, you made money. Just to give you an idea, you can see this one, Oriental Education and Technology, had a 12% move this week. And I'll look at the drive. But this is the pattern I saw. I saw a pattern that was just doing nothing, and I saw pocket pivots coming in off this pattern. And I thought this was intriguing. Kahunas and pocket pivots, and percentage-wise, they've had a decent move. And the drive looks good. Strayer looked good. Now, some of these have given back some and probably triggering stops, but we've had a nice little move up here. It doesn't look like much. That's because the stock came from far away. It's moved from a 18 to 23. That's $5 on an $18 stock. That's 30% in less than 2 months. But these do not make the list of go-go's today. So what I really like to do when I look at indexes is I don't really care about the last couple of weeks. I just showed you a couple of things there. I want to know what's happening now. So I look at two things. At 142, if I look at the force up, only 27 of the industries on Friday gave a positive force. This is a 2-day exponential average, so it means that there's been a lot of weakness overall because it wasn't just a 1-day affair to bring these down. That means if only 27 are down, there's going to be more up. There's probably more of these would be in the 2-day force down. And if I was looking for stocks to short, I might be coming in here to see if there's anything I could find, spooky stocks to sell short. Now, interestingly, what did we talk about in Magenta software is we talked about home builders, and did I do the wrong thing? My bad. If I look at home builders, things we looked at before, if you believe that this economy is about to take a leg down, these are stocks that have had major runs, and if this economy is dying or diving, they may bounce off the 50, but you might be playing them, wait for them to fail to 50 and try and capture them going down to the 200. Again, I don't love shorting individual stocks. Usually when I figured out it's right to short, it's too late. But I might start to look at ETFs, either in specific industries or on the market itself. Now, I will point out that Dave Steckler, who I respect a lot, I think put out a buy signal on the home builders ETF. Now, he uses a lot of Connors tools, and Connors is the king of reversion to mean. So since they're all pulling back, the ETFs clearly pulling back, well, the Connors will be predicting a snapback as perhaps they've fallen too much too fast. Just take a quick look at semiconductors, and we'll go into the long side. talked about shorting Intel at least 2 weeks ago. It broke below the 200-day moving average. And this has been a nice short. And the nice thing is, I talked about support on the way up with the moving averages. That 8-day exponential has been a blanket over Intel as it's fallen from 26 down to 23. I think we first brought it up on this candle to press on this one, and I mentioned that I thought this was going to drop some more, and it has. Perhaps it's going to tend to base here. But Intel has certainly been a sticky stock to have sold short. Altera, a sideways 200-day moving average. It's failed. It had a negative pocket pivot. Again, I'm not a big individual stock shorter, but clearly in the semiconductor space, here at TI as well, lots of weakness when you look at everything being below the 200-day moving average. Let's look at the long side. So it's up and go back. All right, so these are the different industry groups that had a positive force today. The first thing I notice when I look at these is that it's a shitty market. They're up 2.3% is the highest in the last 5 days, and these are the positive industries. And in 1 day, it's really been flat, hardly any movement at all. Now I'm going to take a quick break and let's talk a little bit about what the market performance has been. Those who've been on this before, I like to look at what I call the GPA, or the group performance analysis of the market, taking different baskets of stocks and imagine that I bought them on Monday and sold them on Friday, get a sense of what's working, what's not working. And what I found here was the only positive group were person long weekend. Well, what's person long weekend? Person long weekend were those person pivots that I scanned, which I did on Friday, and put these all in one group. And as you could see last week, the only positive group up just a nibble, but in a down market, that's the difference between this and the S&P. This was the only group that was a positive performer. These two did not have any stocks in it. So the S&P 500 was down 1.31%. HGS 100 looked like the S&P 100. 2/3 of the stocks were down. The IBD 50 was down 1.39. If I take my stocks and assume I didn't add anything, subtract anything, didn't have any stops in, or anything like that, all of which would not be a correct assumption, my stocks were down a little bit worse than what the market was. And but again, I do manage my positions. It's not to say that it wasn't a bad week last week. Now, if I look at all the stocks that I put in my buys list, for some reason I didn't put it in here. I can tell you that the buys did about as well as my regular stocks did. So it was not a great week to be a high-growth stock investor. Frankly, it wasn't a great week to be a long investor. Internet software services, I didn't like a whole lot. I like Baidu. Actually, there's a couple in here that are interesting. Let me take that back. So if we look at a couple of charts here, here's Baidu. And I think Baidu is, it's not a growth stock from a buying high to go higher, but would it be a reasonable thing to buy a beaten up stock, which is, maybe it's time for it to turn around and go higher. So Baidu, one-time high flyer. Again, it's not high growth stock investment by any means. It's below the 2-day moving average. Yet, why do I like it? I like it because it's got kind of a double bottom feel. It's got a rounded bottom here. It has Kahuna come in. It's got good earnings per share growth. It trades at a multiple, half of its EPS growth. Long term, it's been a good flyer. If you look on the long-term chart, I don't know, maybe it's ready to run. Maybe get you back up to this lip of the cup, which would be a pretty substantial move. So I'm putting that on my watch closely. I'm not sure I want to buy it right away, but from a technical perspective, what will get me excited? Take a look. So if it breaks above the 50-day moving average tomorrow, has on volume, I might be interested already, to be honest. But again, not a high growth stock by any means. What else do we got here? We've got NetEase, Chinese gaming company, I believe. Now, something I like about this guy, he makes money, although not great earnings per share, but everything is turned green. In fact, this kind of looks like Baidu might look like in 3 to 5 days where it's broken above the 200-day moving average. The group is heading up. And I'm going to put that as something that I want to look at in one of my other programs. All right, NetEase. Equinix, great stock, tight as can be, probably doesn't trade a lot of shares. I trade a million shares a day. $200 stock, nice tight up move. I don't buy a lot of $200 stocks, so I'm going to skip that one. Yahoo, tempted to say something sexist, but I'm going to be good. Google has certainly been a leader. We looked at it before. I don't know how much, Google's had a big run, so I'm probably going to stay away from it up over 20% since it broke above the 20-day moving average. This pattern here, somewhat like what I saw with Baidu, and maybe that shouldn't surprise me with a similar industry, but certainly not the same kind of a stock. So a few things to like. Baidu, NetEase, both look interesting. The index made it through some of my screens as well. Pulling back, had an update, broke through the 8 and the 17-day on Friday. Mostly green up here. Makes money with growing earnings per share. Trades at a multiple about its growth rate. Doesn't pay a dividend, but it's, again, it's above the 200-day moving average. Mostly green. Something to watch, perhaps. Wasn't my favorite stock. This is what top down is. I'm looking at the top sectors and looking within it for the top stocks. Now, not a lot of Progress Software and NetSuite and Commvault all interested me. Oracle and Red Hat, less so. Take a look at Oracle. This is a historical big star. It did get a nice run up this year. It pulled back. Right now, it's sitting below its 50-day moving average. It doesn't have much in their earnings per share growth, mostly red up there, and trades at a multiple of 13, and it's got a growth rate that's getting smaller. Red Hat also didn't do a whole lot for me. Been kind of flat, mostly red. Not much of an earnings per share growth rate. The next couple I have more interest in. Progress Software, at least next quarter, got some earnings, had 2 pocket pivots last week. Kahuna come in, broke above the 200-day moving average in a strong group, and I will put PRGX in my list to potentially play with and think about this group. NetSuite is a cloud computing program. It's one that trades much bigger than you would think based upon its earnings and its multiple. And it's a momentum stock. You can see how many times it had pocket pivots in the last couple of weeks, potentially breaking out again. Looks like it's at least let's see if it's an all-time high. It's at an all-time high. Everything is green. I mean, if that stock had earnings, I'd be freaking excited. Some people like this stock, even though it doesn't make money. Lots of weekly kahunas and pocket pivots. That's a leader. And as a leader, we'll respect it as a leader, and that's put it on the list. Commvault was another one that I thought was interesting. And again, the same type of a pattern, makes money, trades at a multiple that's high, twice its earnings rate, which I don't particularly love. And kahunas and pocket pivots. So Commvault was another one, again, looking at the best industries and trying to find some of the better stocks in those industries. Let's go back. Next one down for 2 is in gaming. Now, it's interesting. These do not have great seasonality right now. I actually own MPEL, and this was the best of the bunch. And, if you look at it, and if I only showed you from here on, it's in a really nice up move. It's probably got another couple bucks before it hits overhead supply. Everything is green. Its earnings growth is not there. Why is the stock doing well? Because there's a lot of good news about Macau. I'm going to not put this on my buy list. I already own it, and I'm more worried about how long I'm going to own it rather than buying some more. Gold, we've already talked about the gold, and very news-driven, and no surprise, you'll see some juniors and some senior gold plays very quickly. Here's a Royal Gold, a smaller gold. Certainly a nice full run. Had a good day on Friday despite the market being soft. Gold is all about the future. Will we hyperinflate to get out of this mess? Will Draghi start printing more euros? Will the economies improve and the dollar goes down and gold goes up? If the economy slows and the dollar goes up, gold goes down. There are people, Peter Schiff and others, that forget 2,000, 2,500 gold prices, in which case these stocks go up. Hard for me to know what to do on long-term or intermediate-term investment if it's so news-driven. This is the leader, RGLD. There are a lot of them. One of the larger ones is American Barracks. Go from $60 million a quarter to $3 billion a quarter, and just broke above its 200-day moving average. This could be a nice place for it to run. As you can see, it's had a very nice run already, up about 35% from where it was to where it's at today. No earnings growth potential, but being driven more by story than necessarily by fundamentals. That next one down is leisure products. So I have to talk quietly because some of us are this. If you believe in, if you don't want to own a stock that makes guns, then don't listen to me. But this has been a great leader over the last several months. This is Smith & Wesson. And you can see it's had a big run since December of 11. It continues to run. Even after the recent Aurora, Colorado pullback and some reported low earnings by RGR, Steve Wurzer, I think, Smith & Wesson has had a nice run, and you can see up here it's got great earnings per share growth. Pocket pivot on Friday, certainly not extended. And, I might put a conditional buy order if I want to buy more above the high of the last couple of weeks. As it breaks through that high, I'd probably be interested in being in this stock. Now I'm already in it because of the earnings per share growth, and I've got my own position sizing and exit strategies in play. Leapfrog also I found intriguing. Different type of story though. I like pullbacks. So this is a pullback. Now, I don't know if I like this pullback or not. I haven't spent much time looking at it. Why do I like pullbacks? Because if the stock starts to move up, here's its target. So I've got from 9 to about 10.5. All right, so that's $1.50. It's about 13. That's about 16, 17% in a short period of time. So it's a high probability move. I might be able to do some vertical option strategies where I buy one in the money and sell one above here, and and make money goes on the stock and collecting the premium. But I think this is a high probability trade, and I also know that I can put my stop right below the 200-day moving average and I'm not risking much. So I'm going to put Leapfrog on my list. And those that know me know I'm a pullback sort of kind of guy. All right, nothing else there that I remember I liked. Look at a couple more, and I'm going to show you a couple more tricks. Oil exploration, I guess it's time to be in them. The stocks all look like this. This is one of the better ones, S&M Energy. And they've had a nice run up when they pulled back last week, bounced off the 50-day moving average. Couple of pocket pivots under the 200, which I don't like. Everything has turned green. Does not have earnings per share growth, but the sector has turned up, and right now these are looking interesting. I'm going to put this on my list so I can look at it in a different program, but I'd rather see something that has better, is above the red line. Gulfport had a nice run, and maybe this is one to play. Similar, doesn't have a lot of earnings per share growth, and pulled back for the last couple of days and then took off again. Big run up since the end of June, and all green. I like this picture more than I like the last one, so I may want to put Group GPOR in a list. And you could go through on your own leisure and look at others of these. So many building products, Terex or trucks rather, is going to be sitting here. These guys make the wood that people use for a number of things, including the porch. And you can see, I had to figure out what happened on Friday, where we had a opened here, traded down to the 50, and closed above the 8. What a big deal. I don't know if it's called a belt hold, because it didn't get above the prior day high, but it turned out above the prior day close. So it had a range from between $29.92 and $33.51. So that's $3.60, over a 10% range in one day. That was a pretty big range. Nice move up. Have to find out more about it, but I think that's an interesting looking stock as well. But boy, I bet a lot of people have their stops run. All right. So what I've done now is I've accumulated a lot of stocks that I'm going to, one of the questions I have from folks is, all right, you watch so many stocks, how do you know what to buy and what not to buy? Look at biotech and look at biotech, and then I'm going to do something else, change the group. So Regeneron is certainly a leader. It's expensive. It's had a number of recent approvals. Most of its products or many products have marketing partners, Sanofi, Bennett, for several of them. It's had a monster move if you look at it on the weeklies. But something to be aware, and I pointed this out before, I was like to go long this stock in January of this year with moved from 50 to 150. Not a secret. It's had a lot of good press if you're in this space. And the secret is this piece here. And so this is not cheap. It's 14.6 billion market cap. The next one, Ariad, and a lot of these pre-approval companies are at 3 or 4 billion market caps. And if the drugs get approved, they're going to double. Medivation was one that just got approved. Ariad, which showed up on the potential shorts, is Magenta, and I said I wouldn't short it because it's got a drug up to approval, is this one right here, and it's in a very powerful move, and it's probably about 4 billion market cap, waiting for its drug to be approved by the FDA. Likely it will get a pop. I'll just look at a couple here, and then I want to get out of this. My favorite remains Celgene, and better lucky than good, because those who follow me on the board, I rarely say to buy something. I said to buy it on this day because it got discounted way over what it should have been discounted. And as you can see, it's had a really nice run, about 20% since that happened. I still like this long term. It's got a great portfolio of cancer drugs, certainly not extended. It has a market cap of 32, 33 billion. Every once in a while it's named as an acquisition candidate, but I know their management team, they've got great products, and they've got a couple of approvals that are pending that could take it up to closer to $100. So I've always liked Celgene. And then probably the hot spec play would be these guys, Pharmacyclics. And it's pulled back, it hasn't pulled back much dollar-wise. Makes no money. They've got a treatment for chronic lymphocytic leukemia that will become the standard of care for the most common leukemia seen in adult patients. And it's a great drug and a great opportunity, and it probably trades at a 3 to 4 billion mark, 4.4 billion market cap. The one thing I don't know well about this company is how much of their earnings power they sold to other folks to stay alive. But this is one that the big blood meetings are in December, and I expect it to run up before that meeting. It's a very, very nice company and a very nice product. All right, so top-down analysis, we sort of a push on the status of the market. I looked at some potential shorting candidates in the home industry. With Magenta, from the seasonality, they're the same stocks that showed up when I looked at top-down the sectors. I looked at a number of long things. So where I'm at in my weekend review is I started to accumulate stocks to look at. Now, those who know me and know how crazy I am know I've looked at charts all weekend long, and I've actually identified a large number of stocks I'm interested in. So I have stocks that I have characterized as extended or gone, breakout EPS all-stars, pullbacks ready to run, and then pullbacks waiting for signal. And these are all stocks that I will be watching as the market opens up several of them I've already put some buys on. So let me show you a neat thing that I do, I think neat, in Thinkorswim. So the first thing I'm going to tell you is what I'm going to show you when I set my conditional orders will only be there if TD Ameritrade considers you a Thinkorswim account. Everything else is the same, but the one box I open up is different. And it took me a while to figure out why I wasn't getting what I was supposed to get. I am not using Bob Meagher's indicators here. I use those as well. I'm going to demonstrate a different technique that I've been using and introduce you to another company. So the company that I'm going to introduce you to is called Never Lost Trading. I got an email from somebody who saw that I used them and asked me questions. The website's kind of colorful. Is this guy for real? And I said it gets even worse. He doesn't use any standard indicators. His company's based in Florida. His bank is in New Jersey, and he says most of the time in Germany. And I said, despite that, it's probably the best investment I've made, sure that even, especially when it comes to knowing what to do. The guy is a genius, and what he's done is he created his own systems and indicators, trying to come up with things that predict and follow what the big money does. And as I said before, when I talked about effective volume, I said that there's a lot of folks that want to trade along with the big money. So what also attracted me was the thing that people afterwards, can you not give us buy and sell signals and tell us what we do? And this is so darn complicated. So I can swear by these guys. I wrote probably my biggest check ever to a trading company to him to purchase all of his programs. He does one-on-one mentoring and teaching. Pacing right now, I got about 16 hours of videos that I keep reviewing, and I'm just touching the surface. And let me show you what's really cool. I have dumped most of the stocks we talked about into a large list. And during the day, this list will be live in the market, and I'm going to be looking at this column here to see what turns +1 versus -1. And if I see a +1, then I'm seeing a buy signal at the open tomorrow if it meets certain criteria. So let's take a look at Cerner. So we're going to go into our chart. And, all right. And I'm just going to tighten it up. So as you can see, I've got an order already put in. So basically, if we go back to the HGSI chart, and I look at Cerner, I was pretty excited about Cerner. I got to go back to PCYC. Real quick, this is part of the excitement about PCYC, is it has royalty payments that come in. That's what this is, and the reason why it's all over the place is it's royalty payments. It's not necessarily recurring income. That's how they pay the bills. So here's Cerner, and what we talked about Cerner is it's pulled back to the 200-day moving average. It would have been better on Friday, but a relatively low on-entry position, low-risk position here, because I know my stop is either going to be at the 200, maybe at the open yesterday, maybe even the midday yesterday, but it's certainly not extended. Pocket pivot in Kahuna. I think this is a buy, and my target is it runs back up to the old high of 87.88. And that's $10 from here, and I'm going to play options on this. So I'm interested in buying Cerner. Now I need to have a buy signal. Here's my buy signal. And what this is telling me is, this is what I want, let me make sure. Yeah. I want a different chart. It'll be the same result, but I want this one. Okay. Now, he is incorporating in making the signal a number of things, including seasonality, which is down here, and I'm not going into this. I'm not here to teach you never loss trading, because you can't do it until you buy the package and get his indicators. But what he's telling me is a little, I don't know what color that is, light blue, whatever color light blue is, he's got another name for it. Arrow. A buy if it buy tomorrow if it exceeds 78.09. Okay. Now, I happen to agree with that idea based upon the regular chart. So he's basically saying that if I get above the high of the day, buy. Now, that's actually safe because if the market opens down tomorrow, I'm not going to get above the high of the day. If they come out with bad news overnight, I'm not going to get above the high of the day. So I don't need to put a market order, and I'll put a limit order in to buy if it goes above the high of the day. Now, I'm going to buy options on this stock. So I'm going to go right-click, trade, going to bring up Cerner, and I'm going to open up in November. Now, one of the things that Thomas has taught me has been to look at, I've got too many windows open up here. Let me slow down just a little bit. He taught me to look at options from Delta 75 options. Excuse me, Delta 35 options as the options that he's educated me, and he's pretty much convinced me that they're the options that I want to buy. So let's take a look at the option chain. So as you can see, that's what I bought here, Delta 42. So if my target on this stock is 87.88. So one thing I might do is buy the 80 options, and then if the stock trades up a little bit, sell the 90s. So I'll get back some of my premium, and also it's beyond what I think the stock is going to run. I give up some of the upside. But here's what I like about this. So I'm going to buy these options. So Cerner Corporation, let's say I want to buy, I already put in a buy for 30 or 40. Let's say I want to buy 30 more. Now, if you remember, what does the chart say? Buy it if it goes above 78.09. So I go back here, and I want it to be, let me get my bearings, where'd it go? Order entry. Hold on a second. I got so many things open here, it's driving me nuts. So I'm going to go back here. Let's remember one more time. 78.09. November options. There's a limit. I'm going to buy 30 of them. And now the piece that you won't have unless you're considering the Ameritrade candidate, I mean, I think it's swim. So I want to buy 30 options, November 12 calls, limit 285. Put in a low bid. How about 245? And I only want to buy them if the stock goes above. I don't know why I can't remember this stupid number. Trade at or above, and what was the high? 78.05, 78.09. So at or above 78.10. So what I've done now is I've created a conditional order that will kick in tomorrow that confirming said if Cerner trades above 78.10, I'm going to put a limit order in at $2.45, and I did something wrong. Let me go back and fix that. I need to edit. I'll put the that's a little different, $2.45, and confirm and send. So if it trades above 78.10, I'm going to buy 30 calls, 8-hour calls at $2.45, and I'll hit that, and I just established the order. And I'm going to cancel one of my orders later because well, it's not rejected, so I'm fine. But using Thinkorswim, I was able to define the parameters of when I want to buy or I don't want to buy. So the nice thing is I can create my different lists, and I have lists of my stocks, my buys, but I also have the ability, well, you've been on my earlier calls, you know I like looking at the group inclusion filter, and these are the top 60 that came through, and here are two, actually I own both of these, that's interesting, that came to the top. Let's take a look at Calumet products, and must be a buy in one of the other programs. I'm already in this stock, unless I got triggered last week. The buy was at 30.5. I'm in this stock already. HCII, which is Homeowner's Choice, which is a property and casualty insurance. But what you can see, and I don't do it justice, is that it's actually printing on the stock, on the charts, buy and sell signals. And a lot of people who emailed me wanted to know, how do I trade in the market? How do I watch so many stocks? I watch them by putting them in Market Watch, and I can add pocket pivots and kahunas and forces. I just can't have as many stocks then. And I look for things that are changing. I really look at my market here at the ones and the minus ones. The other thing I can do is I can scan. I can look for strong up and down movers. And I define these with options, prices, volume, and I can scan throughout the day, and it's going to give me lists in the marketplace of some of the best stocks to look at. And then I'm going to look for the up movers, which would be the ones that are solid ones. Here's that Cerner I was interested in. And I'll think, here's QSII, which was one of the other ones we looked at in the same group. Let's look at, and then we'll take the microlumina. So put it in a chart. I'm going to go into HGSI and look at it here first. I own it. So this is what help. They make a biotech stock, and they really make things that other biotechs use. And they turned down a Whopper takeout offer from Genentech, or Roche now. So they've been in a pullback. They started to move, and then short-term pullback to 17, mostly green here, showing evidence of a pullback with this being red. Looks to me like it's going to go run again. You can see the group that's so strong, had a lot of pocket pivots. You know, I can set my stop if I want to be very aggressive. I could set a stop down here. I could set my stop right below that 17-day. Violates that, I'm out, so it's not too far extended. I don't know where to put the stop. I go back into Thinkorswim. And I go back into Market Watch. That should be in the chart. Let's take a look at this. So let's see, you can tell I've already put a buy order in it. So I put an order in, so the chart says buy it at 48, goes up 48.5. So I got an order to buy 10 options, 48 calls at 285. When it trades above 48.50, and I'll put this order in open on September 30th tomorrow. So this program, there's a lot more to this. They have names for these. They're not kahunas. They look like kahunas. They actually act like kahunas because of momentum indicators. The seasonal is pointed down, which is a negative. But this program actually is painting for me the buy signals. And what I got for my investment, in addition to many indicators, was ongoing education, how to use them, how to use multiple indicators and multiple different studies at the same time to improve my odds, and then a philosophy on trading stocks that is pretty fast using options that I have to admit this old dog learned quite a bit from Thomas. on how he looks at the option market, and it's caused me to change some of my behavior and reduce some of my risk. So you can scan, you can watch your own stocks, you can print, buy, and sell signals on the stock, and I've more than paid for it in the couple of months that I've had it on a couple of good option deals. One that I made a lot of money was buying Lulu, which turned out to be right before earnings, which was stupid, and Onyx, which was I bought it on a pullback that would be the buy signal. So I think I wanted today to have a chance to actually introduce you to some of the other tools that I use, the trade formers, and some of the other things. It looks like I just got a link, so I'm going to open up my email and let it load while we're waiting. So I introduced you to Market Gauge, data learning for the company, and their trade formers, and how I use those to put robots in the market to do the things that I want to do. I had the chance to, again, go through top-down investing. We looked at TradeStation, not just the robot trading, but the commitment of traders and elders. We looked at stocks, found some that we were interested in. Then I jumped over and showed you how I would use that list, putting it into my Thinkorswim, and then looking for buy and sell signals using my never lost trading, which right now is something that I'm pretty excited about. And to last comments, tradeformers.com. You can learn more about TradeFormers. Please mention my name if you want to talk to any of these proprietors. Never Lost Trading Home, neverlosttrading.com. He's going to do a webinar with me in the next couple of weeks. Again, it might be that missing link, like TradeFormers, to go from I pick stocks I like to which stocks I want to buy. And lastly, we looked at Magenta Trader and seasonal analysis, finding some shorts potentially in the housing market over the next couple of weeks if there's softness in the market. And lastly, see if this is something good. That's the panelist. All right. That's not what I wanted, George. I needed the for everybody else. Let me see if it shows up when I update HGSI, and then I'm going to say goodnight. Update, start. Yep, usually it will pop up. So I will try and put something on YouTube, but the place to look at is hardwarestockinvestor.com. It'll be one of their webinars, and they'll be advertising it. So at this point, I'd like to thank everybody for spending time with me, and have a great night and a great week next week. One last quick look at the futures. And China's had some numbers that were a little bit better than they were last month. As you can see, we're a little bit down. I would say another word for that is flat. So good night, everybody. Safe and happy trading. Have a good day and good week. Thank you. See you next week. Bye. All right. So,